Today, I want to talk about how the shorts are on their last legs. They're down over $175 billion so far this year. They're using zombie pump stocks to meet margin requirements. And now they're even trying to delay the reverse split to try and survive just a few more days. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Frank tweeted saying breaking news. Short sellers have now lost $175 billion this year. It says short sellers have now lost more than $175 billion this year, according to the latest data conducted by financial analytics firm S3 Partners. According to data from S3, only 30% of every shorted stock trade was a profitable trade for investors this year. Many economic experts anticipated a recession to hit the United States during the first quarter of 2023, which led many to believe the bear market would linger. But 2023, especially so far, has proven the bears wrong. Investors have piled into tech stocks and growth stocks and smaller meme stocks through 2023. Both sentiments being AI and relaxed financial policy have helped the S&P 500 and Nasdaq 100 to surge about 17% and 39% this year respectively. Short interest in stocks including Nvidia, Meta and Tesla, and in growth stocks like Upstart, Carvana, Coinbase and many others have proved to be the least profitable shorts for traders. In June, Ortex reported that short sellers had lost as much as $37 billion that month alone. And as a result, in total, shorts are now down over $175 billion this year. And potentially even more worryingly for these hedge funds or for these shorts is that some short sellers have been adding leverage to their short positions. Obviously, any hedge fund adding even more leverage is just setting themselves up for even more losses as this bull market or as this current upward trend continues. And obviously, especially if some of the other meme stocks like AMC, GameStop, Ape and others end up running, it could end up spelling disaster. And as I'm about to explain through the rest of this video, it seems the shorts are already on their last legs. Already trying to pull out all of the stops they possibly can to meet margin requirements and avoid liquidations for just one more day. And it seems Biotech Moose has discovered exactly why the Allegheny retirement system started this lawsuit against AMC. He tweeted saying, "Why is Allegheny Retirement Fund holding 837 AMC shares suing for losses?" Obviously, 837 shares currently is only worth a few $1,000s, and AMC's peak valuation was only around $60,000. So why would they spend $500,000 in legal fees to sue AMC for losses? Well, he said, "I took a look at their 2022 annual report, and here's what I found. Allegheny is suing AMC to protect its largest portfolio positions, who are likely shorting AMC or profiting from lending AMC shares." If you look at Allegheny's largest portfolio positions worth hundreds of millions of dollars, you've got Amazon, you've got Griffin, and you've got BlackRock. With a weighting of 3% of their entire portfolio worth over $45 million is Amazon, a top-weighted stock in Allegheny. I've made many videos in the past of how Amazon wants AMC to go bankrupt to improve their streaming services and potentially to take over physical theatre locations. For the exact same reason that Amazon wanted Toys R Us, Sears, Bed Bath & Beyond, GameStop and many other physical store retailers to go bankrupt, they also want AMC bankrupt too. And if AMC did go bankrupt, it's likely Amazon's Prime streaming service would increase significantly, making Amazon worth significantly more. Many of Gridrian's employees previously worked at Credit Suisse, and obviously Credit Suisse had a large AMC short position. It's likely Gridrian did not want Credit Suisse going bankrupt for their toxic short. And finally, BlackRock is making millions and millions of dollars lending out their AMC shares at 1,000% cost to borrow fee, likely happening every single day. The longer this lawsuit drags on and the longer the squeeze takes, the more money BlackRock makes from lending out those shares. And obviously the more Amazon's stock price increases, the more Gridrian increases as well, and the more BlackRock's ETFs increase as well, means more money for Allegheny. Allegheny isn't suing AMC for its losses on their AMC long position. They're suing AMC to protect and inflate some of their largest portfolio positions. And also, especially when you think that some of their largest positions in their entire portfolio being Apple, Microsoft, Amazon and Tesla, if the market did end up crashing during an AMC squeeze, their portfolio would decline significantly. Therefore, they're effectively trying to delay the squeeze to prevent their entire portfolio from plummeting. And as Sojka tweeted, it's potentially possible that Judge Zern is delaying her ruling potentially for the same reasons. If she personally, or potentially through her husband's company, holds tons of long positions in the market, she obviously does not want a market crash. Therefore, she obviously wants to try and delay the squeeze to avoid that crashing market. So it seems because the shorts have lost so much money this year, and the fact they are on their last legs, they're trying to delay the reverse split and delay the squeeze further. Especially because we also know they're using zombie pump stocks to try and meet margin requirements. This is something we saw a lot of last year with new Chinese IPOs, but it seems to be reoccurring again in a few new companies. The day before AMC's earnings were released, the Evergrande stock was pumped over 2,400% in one singular day. And now, after AMC's volatile period and after the earnings have been released, Evergrande just saw a 96% drop. aka they used that liquidity hedge for AMC's earnings results. As you can see from this chart, Evergrande ran from a fraction of a penny up to a whole penny and then a day later fell by 96%. And as I went through in a previous video, Sky Constant Century Incorporated also rose to $30,000 per share in the OTC markets. And then just a few days later, fell back to $1 per share. So again, that's two separate liquidity pump plays being made, both around AMC's earnings, all within a few days. So it seems these shorts are becoming more and more desperate to meet their margin requirements with these zombie pump stocks. Obviously, they're being more desperate to meet these margin requirements because they've already lost $175 billion so far this year. And incredibly, Charles Payne also tweeted saying, "I've been screaming this for a while. Washington DC is brought and paid for by Silicon Valley." I personally agree, but also disagree with this slightly because I do believe Washington DC is bought and paid for, not necessarily by Silicon Valley, although I'm sure they do chip in, but majority by Wall Street. Charles said it's a real shame, and it's also a real crime. We know the SEC, FINRA, the DTCC, and potentially even higher up acronymed departments are brought and paid for by Wall Street. They're brought and paid for by Citadel, by BlackRock, and many other funds, institutions, and market makers as well. But interestingly, on the flip side, Frank also tweeted saying, "Don't forget what the Department of Justice said back in May." You may remember this article that says US action on short sellers is likely due in the next few months from a Department of Justice official. They said short selling, the practice of seeking to profit off bets that a stock will fail, is a key focus for US prosecutors, and there will be more activity by the Justice Department in coming months. Now, if a Department of Justice official said back in May action would likely happen in the next few months, aka the next 3 months, that ends us at the end of August. Therefore, potentially in the next few weeks, we're likely to see more action from the Department of Justice against short sellers. Obviously, I don't know which specific day or date this action will be announced, but the Department of Justice just said in the next few months. And obviously said that about a few months ago. Obviously, I personally would love to see more action from the Department of Justice and exactly what kind of action they end up bringing. Obviously, the SEC tends to just dish out fines and doesn't ever do anything more, but the Department of Justice has more power. Therefore, it would be interesting to see if anyone ends up going to prison as a result of manipulative short selling. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.